This program is sponsored by Trebon Financial Strategies. You can't win the game if you don't know the rules. Welcome to the How Money Works Masterclass. Did you know that financial illiteracy is the #1 economic crisis in the world? This masterclass is where you will improve your financial literacy and learn how to stop being a sucker. In this short series, you will learn several key concepts that will create a foundation for healthy financial habits, teaching you how to earn, spend, save, manage, and invest your money. You work hard for your money. Isn't it time you learn how to make your money work for you?
Welcome to another episode of How Money Works. I'm Kent Adams, and I'm pleased to have our regular here, Dan, and then Kim. Welcome aboard.
Thank you.
You're going to keep us straight and on task, right?
Yes,
Okay,
that's
that's going to be hard between, last time we talked about financial illiteracy and all the things that go into that, and I listened very carefully because I could see myself and identify with a lot of things, and I'm thinking a lot of our viewers did as well. But it comes down to the simple question, a lot really comes to saving dollars in one form or another for future activities, future retirement, and all those things that go in. And we know today retirement depends on more of your own investment as we move forward. Why don't people save more?
Well, the biggest reason is just lack of knowledge.
Okay.
Of really understanding how money works.
Okay.
If they understand how money works, they would probably be much more motivated to save earlier. And I'm speaking mostly to myself.
Yeah, or to all of us.
Yeah, well, all of us,
Yeah.
but I'm speaking to myself because I'm getting up there in the years now where that retirement thing is a little bit more important to me than it was when I was in my 20s, right?
Yes.
So
Yeah, because you're going to live forever and you can worry about that the
Exactly.
last 10 years, right?
Exactly. But now I'm mature enough to know that the day will come where I either can't work anymore or I don't want to work anymore.
Yeah.
Because, well, I'm not a politician, so they seem to work forever. But other than them,
And get rich fast, too.
Yeah, right. But, unless you're in Congress, the day is going to come when we stop
Yes,
working.
yes.
Whether our body says we're done or whether we're just kind of done and we
Yeah.
want to take a break from that. So they just don't know why they're saving. Because saving is a good thing, but understanding why is also equally important.
Yeah. Kim, why is that so?
Well, people's immediate needs take priority over their
Yeah.
future needs.
Day-to-day living,
Exactly.
feeding family.
Exactly.
Yeah.
Exactly. So if you think about the cycle that we go through,
Yes.
you start earning and spending before you leave home.
Yes.
And so everything is fun money or discretionary.
Yeah.
Then
That's
you,
set us in one direction,
Exactly.
though, hasn't it?
Exactly.
Yes.
So then you move into adulting, and that comes with responsibilities. I know. So now you're looking at maybe student debt or purchasing your first home,
A family, spouse,
family,
kids.
exactly. All of those things with those responsibilities, those all cost money.
Yeah.
So those are non-discretionary spending.
Yeah.
Okay, and so what happens is our savings wasn't a priority in the first place,
Yeah.
and then as life happens, it continues to not be a priority. Before you know it, we're in our 50s and we're like,
Yeah.
we didn't do what we should have done.
Yeah.
What do we do now?
Yeah.
Yeah.
Yeah. How much should people be saving? Is there a percentage to start with at least?
Really, I like to back into it. What lifestyle do you want in your retirement?
Okay.
And how much, where's your income streams coming from? And how much are you going to need to put into it to get what you want? So it starts with the goal, and then what can you do to work toward that goal?
And then really, a short answer could be if you don't have a plan at all, start with 10%. Just
Okay,
dedicate
okay.
10% to your long-term
Okay,
savings. And
okay.
that's a good point. I would like to tell a story. I started working when I was age 11, had a regular job.
And that was a long time ago.
That was
Yeah.
a long time ago. Yeah, let's not go into the memory game. But a few things I do remember.
Yeah.
So one of the things I remember is I was told by my parents to start a savings account. So I went across the parking lot and went to what was the savings and loan at the time.
Right.
And I opened up a passbook savings account. And that dates me, right? Passbook
Yes,
savings.
yes.
And I always put some money in there. So from the time I was earning money at age 11 until even today, I've always had some money in savings. The problem was I was saving without a plan. No, they told me to save, but nobody ever told me how
Right,
much or for
right,
what or what was
right.
the end result, right? So what
And
happens
the obvious
is
default is a savings account.
the obvious
that's
default.
yeah.
Well, exactly.
Yeah.
There wasn't
And
even
that's
any
where
other
we all
option.
started, I think.
Yeah. There wasn't another option, right? A savings account, is one of the worst places to grow your money.
Right.
Banks have great services for a lot of other things, but saving your money or growing your money is not
Right.
one of the best ones, right? But there are three types of savings that people want to do. There's immediate, short-term, and long-term savings
Okay.
that they should have.
Okay.
Immediate savings is like, we like to call it the emergency fund.
Okay.
Because emergencies will happen. We
Oh,
just
gosh,
never know
yes,
when
yes.
or how much, right?
Yeah.
But they're going to happen. And if you don't have an emergency fund set aside, that's going to lead to other problems,
Yes.
usually debt, because you dip into somewhere else and then you pay a high amount of money.
Right.
We talked a little in the last segment about how the banks will
Yes.
charge us a lot to use that money.
Right.
Right? So then there's short-term savings. Short-term savings are for things that are coming up. It could be in the next few weeks, months, or even years.
Okay.
It could be saving up for something as small as a nice dinner out, or it could be a vacation, or maybe
Or
you're
a
saving
car.
for something bigger, like a new
Right.
car, or even a home, right?
Right.
Those are all still considered short-term. even
Really?
though Sometimes a home people don't think of as short-term, but it
Yeah.
really is a short-term savings.
Yeah. To get to that point where you can get the home.
Exactly.
Yes.
And the reason those are short-term is the next one I'm going to talk about, and that's the long-term.
Okay.
Long-term savings is basically our retirement fund.
Yeah.
Now, when we're in our 20s,
You notice
30s,
he looked right at me when he said that, yes.
when we're in our 20s and 30s, the word retirement kind of flies
Yeah.
right by us because it's so far out. We'll get
Right.
to it, right?
Right.
But if we think of it more as our financial freedom fund, that's a little different term because that's what gives us the financial independence or financial freedom to stop trading hours for dollars at that point in time.
Right.
So here's another thing with regard to savings. Social Security. Let's
Yeah.
talk about that for a second. Social Security, and I'm not going to get into the debate on whether or not it's going to be around later or not. That's, I think for the most part it is.
Yeah.
But even if Social Security works as it was originally planned, that was only supposed to supplement or replace about 40% of your pre-retirement income.
Right.
So you still had to do something else,
Right.
right? And most financial professionals would agree that 70% of your prior earnings when you were working,
Right.
70% of that is about a good retirement goal.
What you can live
obviously
on when
more is
you
better.
retire, right.
Yeah, but 70%. So if there's only 40% out of Social Security,
You're
we
missing
still, We still
something.
have to make up at least 30%.
Okay.
And the earlier you start doing that, the better off it's going to
Right,
be.
right.
So the question is that going to be enough for retirement?
Yeah.
We don't know.
Yeah.
You know.
Should you, as you start saving and so forth, should you begin to pay off that debt? Where does that come in versus moving on to save for, mid-level and long-term?
I'm going to let Kim take that because we were just
Okay.
talking about that the
Yeah,
other
I'll
day.
take
Yeah.
that. The answer is no.
Oh,
It should happen simultaneously, and most people
Okay.
think they want to deal with that debt first.
right.
And so I'll use my own son.
I'll
as-
feel better if it's gone, right?
Exactly.
Yeah.
Exactly, because
Yeah.
that is a weight on your shoulders.
Yes.
So I'll use my son as an example.
Okay.
He graduated college. He's got student debts.
Yes.
He's got a job. We're going over a strategy together.
Yes.
And he wants to focus on those student loans. Those mean a lot, which as a parent I appreciate.
Yeah.
So we worked out a budget, and it's like, you've got to have that emergency fund. That's top priority.
Yes.
Yes.
Or you'll be
you've got
coming to
money
me,
going.
Mom, right?
Exactly. Exactly. So I had him
We all
split
know.
it.
Yeah.
Split it and put it toward the emergency
Okay.
fund and the student loans.
Yeah.
And so once his emergency fund built to where it needed to be,
Okay.
then that money just shifted right over to the loans.
okay.
And so then when COVID-19 hit and his job was in question,
Yes.
there was no stress because he had the funds set aside. It could make the loans if he needed to. Then
Helps to have you as a mom then, doesn't it? Are you adopting kids and young people today?
Actually, yes, that's kind of one of the reasons I went into this business. Is
Yes.
I really love helping people
Yeah.
in that way.
That makes a
And
difference,
the younger
doesn't it?
you are, when you know your strategy,
Yeah.
and if you have a strategy, the less anxiety
Yeah.
that you have. So,
We have an intern helper here that is in his last year at Whitworth University, and he mentioned the first time I met him about, well, I don't make a lot because he's doing some other things, but I still make a payment into my future.
good
Excellent.
for him.
You know,
Excellent.
and I'm going, I don't hear that a lot
Right.
Yeah.
from a 21-year-old.
Right.
Yeah.
We just don't, do we?
Yeah.
But it's going to make the
true.
difference in his
Oh,
life
huge.
later on.
Huge.
Right?
Another way to address this about whether should I pay off the debts before I save
Right.
is when you do it concurrently, think of it this way, if you can think of it graphically. If you are paying down your debt, you're paying interest on it, sure,
Right.
but you're paying interest on a declining balance, which means the amount of interest you're paying is going down and down and down.
Right.
At the same time, if you are saving money on an increasing balance, you're earning interest on a balance that's going up and up and up. So as this one's coming down, this one's coming up. So at the end of any set time frame, you're going to be so much further ahead. Because if you are in the linear mode, saying I'm going to pay off my debts first,
Yeah.
and then start saving,
You're only-
it's most likely not going to happen. Because you know why? Emergencies happen, and if an
Something
emergency
Oh,
always
yes.
comes up.
and you don't have the emergency fund, where do you go? Right back to the plastic.
Especially
So-
if you have a family, a car, a house.
Yes.
There are emergencies.
Exactly.
They're going to happen. We just never know when or how much, but they are going to happen. And that is why it's so important to not put off the savings piece. And there's a future segment, we're going to talk about compounding and all
Okay,
the growth.
yes.
That is so important because time is on your side when it comes to that.
Okay. So I'm young, where we should be starting to save. You've made that clear, although we can do that at any age.
It's never too late, correct?
Never too late,
Never
right.
too late.
But the question is, how do we begin and how do we do it in a meaningful way? Okay.
Yeah. Well, the most meaningful thing you can do when it comes to savings is having your money earning money.
Yes.
Because again, that day is going to come when we can't work anymore, right?
Right.
The money doesn't have that problem. The money is not limited to physical things happening.
Right.
So you want your money earning money. And when you do that, that is the most meaningful thing you can do. So you need to understand the different vehicles that are out there
Okay.
and a place where you can have your money earning money. And so many people are just so unaware. It's very unfortunate, but they're very unaware that there are options for making reasonable returns. Even
Yeah.
in today's environment of low interest rates,
Right.
there's some pretty good return rates out
Right.
there. Yeah.
So you're going to tell us about those in the future here, aren't you?
Yeah, with future segments, we're going to be talking
Yeah.
a little bit more about some of that stuff.
Because I hear from folks that, we all know what kind of the passbook is today is
Yeah.
0.5% or
Yeah.
0.29 or something.
002.
Yeah.
They're very small.
Yeah, and then so we think, well, where's the advantage of saving? But there are, because I also hear from other people who are talking about making 6, 8, 10% too.
Correct.
And so that is possible.
There
It
are
is,
ways to
absolutely.
do that, and there's
Yes.
ways to do it in a way that's, low or no risk
Right.
too. And that's,
Okay.
so many people think that's not true. It's like, oh, high risk, high reward. That's not always the case.
Okay.
I mean, that's a true
I
statement.
can't
but
wait
it's
to
not
hear
always the
this
case.
one.
Yeah, it's going to be fun.
Because I think so, yeah.
Yeah.
Last comments, and then where can people get more information? Because,
Yeah, well, the thing is, I really, as a viewer of this program, I
Yeah.
want people to be comfortable and learn about this stuff.
Yes.
So the way we make them comfortable is we have no strings attached.
Okay.
We will meet with people and talk to them, and we will provide and build a complimentary financial plan for them.
Oh, wow.
At no cost.
at no cost.
Because it's on them whether or not they're going to execute it, right?
Yeah,
And we'll
okay.
help them execute it. So that's something we can do. But a great strategy, I'm always talking about this book here.
Yes.
The How Money Works book.
great book.
I didn't write it, unfortunately, but one of my colleagues wrote it. He did a phenomenal job. This is probably the single best financial book that I have ever read. And
Agreed.
that means a bit because I've read a few. And
I bet,
A lot of
I'll
them-
bet,
and,
yeah.
I'm a bit of a financial nerd, so I've read a lot and I've gotten a lot out of them. And there's a lot of
Right.
good stuff out there. But this one's been distilled down. It's easy to read. It's colorful, and it has pictures and characters.
And you
it
said
really is
we
a
can
good
go
book.
through that in an hour and a half, and that's about right,
An
too.
average reader, about an hour and a half. And,
Yeah.
I will give this to anybody that will sit down and meet with me for their already complimentary meeting. They're going to get a copy of this book because if they leave my office and I never see them again, they're going to take something and they're going
And
to
they're
do
going to be
something
so much
better with it.
smarter about how they save and pay off and plan for the future.
Financial
Because you see,
empowerment.
the goal is to change financial illiteracy in our country.
Yes.
And so really, the company that we're working under, our goal is to radically change it by 2030.
Yeah.
And so,
There are so many things I think back to my days, which was mid-century, of going to junior high and high school, and they didn't talk a lot about savings or doing a checkbook. But in those days, we talked about home economics. My wife wasn't my wife then, but took it and stuff. She's the one that fixes things around the house because she took those classes, right?
Yeah.
We need more of that education,
Yes.
Right.
whether it be from you or somewhere out
Right.
there
Yes.
to learn about this. Because when you reach my age, in almost the mid-70s, it's pretty late to have a major impact. You can have an impact
Sure.
on retirement and so forth.
Yes.
But I'm well past the time to set the course.
Right.
You know what I mean?
Right.
So we got to catch people at high school, college. You mentioned to me one time you've got your kids already have been saving for
Oh, yeah.
years.
They've been using these concepts for many years, and this book is mandatory reading in my household. I mean, my kids are they're all young adults now.
Yeah.
And but they are still they're proud to use me as their financial
Yeah.
manager.
Oh, good. Do they
So-
say thank you, Dad? Yeah.
They-
Have they reached that
Well,
point where?
good question.
Yeah.
I don't know.
Yeah.
Probably.
Yeah, yeah.
But you know
Might
what?
not want to admit it in
but you know
front of
what?
you.
Maybe they do or they don't, but you know what? They do through their actions for sure.
That's
because
what's
they're
important.
You know,
they're
whether it
doing
be
they're
a-
very financially responsible.
Whether it be a parent or not, if you've got someone that you can turn to
Yes.
when you're not sure what's going on for your finances, like you lose your job
Right.
or something
Yes.
shakes you up, let's say a medical emergency.
Yes.
That's what your financial person is there for, to help you through
Yes,
that.
yes.
Exactly.
Yeah.
Yeah.
Good.
'Cause they happen.
Okay, well, thank you. This series, I'm learning a heck of a lot. I don't know what our viewers are watching and getting out of it, but I am. My guess is they are too.
Yeah.
So
Hope so.
that's,
I hope
that's
so.
so important. Hey, thanks for watching. See you next time, right here.
This program is sponsored by Trayvon Financial Strategies. You can't win the game if you don't know the rules.